Hello friends, welcome back to part 8 of my Tesla earnings forecast for Q4 2022 review series part 8. In this video, first we'll check in with Loki and see that he is still sleeping, same as he was at the end of part 7. And then I will share my desktop with you and advance beyond this slide. Hey, I did it right that time. To the next slide in my forecast thread, which was this one. I'm not showing you the Twitter thread because you can go read that one if you want. It's linked in the video description below. I'm trying to provide you more information than I captioned these still images with in that thread by just freeform talking you through these. You can tell that I do not have a script that I'm following for these videos. These are extemporaneous, improvised conversations. You're like, we know, James. We can tell that there's not a script. All right. So what's this chart show? I'll just read you the title. It says Tesla average revenue and cost of sales per cash delivery, excluding leased vehicles and regulatory credits. You know how people hate regulatory credits. We got to get those out of here because they're fake and fraud and fleecing the taxpayer. No, they're not any of those things. But if you throw out the regulatory credits and if you throw out the leased vehicles sold and the leased revenue, this is what you get. This is only I'm calling them cash buyers. And when I say cash, I don't mean they, went to the bank and got a big stack of $100 bills for the day that they took delivery. I mean, they bought their vehicle instead of leasing it. That's what cash delivery means in this context. So what is the general trend that we've seen for these red bars? The red bars are the ASP, excluding leasing and credits. Well, that's lower now than it was the beginning of 2018, but we know why. At the beginning of 2018, Tesla was selling a lot of Model S and X vehicles as a percentage of total vehicles sold, because they were just beginning to ramp up Model 3, and there was no Model Y yet, right? So that's what brought this down, and it bottomed here in Q1 of 2021, as we saw in the previous chart, and then ASPs have been above $50,000 since. So I'm forecasting in Q4 a $55,000 ASP per cash delivery, which is up just slightly. It's about the same, really, as the Q3 2022 number, $54,700. But for the costs, I do have those going up almost $1,000 per vehicle to 41.1. That's about comparable to what it was a couple of quarters ago. These numbers are higher, the costs per vehicle this year than they were last year, due to selling in a challenging macro environment. If you've been following the inflation numbers, inflation is up. So the costs per vehicle are up along with inflation. Q2 was also a bad quarter for costs because it's hard to be efficient when one of your factories, your most efficient factory, in fact, gets closed for 4 weeks for the Shanghai lockdowns, and then running at limited capacity, 1 shift per day, 6 days per week for another 4 weeks, which is what happened to Giga Shanghai in Q2. So hopefully it's no worse than that. I feel okay that Tesla has a good shot at beating this number. What's that leave us to talk about? Just the line, the number of cash deliveries. What's cash deliveries? It's total deliveries minus leased deliveries. So those keep going up, up, up. Check that out. Much, much higher cash deliveries here. It's going to break 400,000 for the first time in the same quarter that it's going to break 300,000 and 350,000. No, not 300,000. It broke that one last quarter. But in the same quarter that it broke 350,000. So that's a huge cash deliveries record for Tesla incoming at the end of Q4. So let's hope the haters and the short sellers and the Tesla Q Generalissimos have their seatbelts fastened when they see the deliveries number for Q4. Should be pretty high. It would be higher if not for a couple of things going on. One of those is that there's a new EV tax credit coming in 2023. The Inflation Reduction Act, I have to always put in quotation fingers, is bringing back the $7,500 EV tax credit next year for consumers. So some of them who have a delivery scheduled later this month, December, in the US, may wait to take delivery until January. So that's incorporated in my forecast. I have a lot more production than deliveries in my forecast for this quarter. For that reason, and because the wave is ending, right, and because I want to give Tesla a good chance at beating my forecast. So, wow, Loki's really being active right now. So, if that's the content you're here for, then there you go, digging up his blanket. All right, anything else I want to say about this chart? It looks pretty good. Next year, we should see these costs maintain at about this level. We should see these costs maintain at about this level. So what's that do for you? Well, the more you sell, the more money you're going to make. So what's Wall Street care about? They care about earnings. How do you grow earnings? You grow earnings with revenue volume, so sell more units. Revenue rate, charge more for your units. Probably that's not going to be happening. But the first one is Tesla's going to sell more vehicles in 2023 than they did this year, for sure. And efficiency. So get better at controlling your costs of sales, which is how you improve gross margin, or your costs that are below that line, below the gross margin line. Costs of research and development, selling, general administrative expenses, other expenses, right? So I expect earnings records in future quarters. That's what my forecast is. But we will get to that in future videos. And with that, I will show you what Loki's up to. He's comfortable now. And I'll say if you enjoyed this video, click the like button, and if you're not subscribed to my channel already, go ahead and subscribe to my channel and click the alert bell to get notified when I post fresh content. Thank you to everyone who supports me through Patreon or by joining my YouTube channel, especially Kathy Kitchler and Halter Ferguson Financial, my executive producers. And I'll see you in the next one.